Where do you see 10-year yields going over the longer term? I'll put a chart up right now that suggests that technicals say breaking 3.0, but not going a lot farther than that.
I love when you bring in technicals. Only mocking it slightly.
Yeah, a little patronizing, but I don't blame you. You're right. But how do you see this?
Yeah, I would join you in the mocking the technicals, but in general, we do think that the 3% is more of the ceiling. Again, because the longer-term rate is probably not materially changed by the fiscal stimulus. We still have these structural forces in the economy, the aging demographics and the lack of productivity growth that are going to keep that yield contained.
So if, in fact, we go to 3.0 or slightly above, we're around sort of 3.1 right now, what does that do in terms of overall policy, financial conditions? Does that mean we won't tighten too far?
So far, financial conditions have held up, right? So we've seen that the economy can handle this level of rates. But yes, much above that, that's where it gets a little bit dangerous. I mean, everyone's watching the 10-year real yield and that 1% level. You know, we're kind of close to that. We'll see how the markets react to it. But I think significantly above that would be detrimental.
So this week we get auctions, we get 2, 5, and 7-year. Usually the takedowns have been pretty solid, like able to absorb the extra supply. Do you feel like it's going to be the same scenario this week?
I think it depends a lot on the Fed. But yes, I think in general we have seen better demand for treasuries at these yields.